Okay, welcome back. We are here today. It is our fourth part of this series, this pitch deck teardown series with Shane Pope, who so graciously put himself and his company Remy out there for us to be a fly on the wall and listen to him pitch a VC, pitch an angel investor. And today we are going to hear how it went from him, what's changed since he did that, how the follow-up went with those guys, and what he's working on now. Shane, how's it going?
Yeah, doing well. Great to be back. It's been a fun process. Excited to close it out with just some learnings and the recap.
Yeah, and I'm excited to hear where you're at. You're headed to speak at a TEDx event, you said, right?
I am.
Tomorrow?
Yeah.
So
Speaking
cool.
this weekend. Yeah, I'm
Nice.
excited.
Congrats. Tell us a little bit about that.
Yeah. So the idea is it's interesting. Like I'm an AI founder, but I'm also like very concerned about the role that AI can play in the brain and in society. And so this talk is really centered on this idea of like, how do we integrate technology properly? How do we make sure that we're not just going full steam ahead at something that could be causing challenges down the line? Because I think in a lot of ways, that's what happened with social media is it just kind of burst onto the scene. It was exciting. Everyone was using it. And then we're just now starting to realize maybe some of the consequences and the challenges there. So the talk is just centered on this idea around humanity and like, what does it mean to be humans and how do tools fit into our world and AI specifically? What do we want it to do? Where do we want it to fit?
Wow, very cool. Well, send it once you have it. I would love to watch it.
Yeah,
I think
absolutely.
that's like perfectly demonstrates one of my favorite parts of entrepreneurship is we have these huge things like AI right now bubbling up, and so much of it depends on who's behind it and what their morals are and what their level of greed is and all that good stuff. And we need more entrepreneurs jumping in to solve problems who are coming from a good place. I think there are lots out there that do, but we can always have more. So anyway, I
Always
love
need
that.
more.
Yeah, it's a scary thing coming up. Hopefully it's not, but we'll see. Okay, let's go into how it went. So first of all, what was probably the most unexpected thing? And then I want to get into where you're at after, but real quick, I want to just go into like, because you, to recap for anybody listening, you were not sure which path was best for you. Our very first episode was, you asking what's the difference between angels and VCs and, how does that work? And so now you've kind of really gotten more insight. What's something maybe surprising or unexpected that you kind of discovered in the process?
Yeah, I think for me, it was unexpected how much clarity I got from it. Cause I think like sometimes, oh, am I going to talk to this person and it's going to confuse me more? Or if I get like, sometimes you can be concerned that if you go deeper down a path, then it's going to make you more uncertain about where you really want to go. And so this process was very eye opening for me and just clarifying what I love about starting a business, what areas are challenging for me and kind of how fundraising really fits in that equation. And so, yeah, it was a very educational experience because each conversation was both similar and different. And we can dive into how that felt from my perspective. But what I really learned about myself was I don't like fundraising. Like I don't like the act of like pitching and feeling like you're trying to convince someone of something because I've got a lot up in my head. Like I've got a lot that I tried to fit into slides and they're poking holes. And I'm like, if I had an hour and we could sit down at a restaurant and just like talk about all that, like it's just the actual format is very difficult and it presents a lot of challenges, especially for someone like myself, who I think my company and my vision are well ahead of like where I am execution wise as a company. And so I think the bigger that gap is, the harder it is to close it in a pitch, in a deck. And so, yeah, it was really interesting to me, like how clear I learned like what I like about starting a business and areas that are more difficult for me. And I enjoyed it. I love the conversation. Like I could sit and talk to VCs all day because they're fascinating people and they have great insights. But the actual act of like pitching for money is just a very uncomfortable.
Hmm. So is it the ask, or just knowing you're going into the meeting with that expectation?
I think the most eye-opening, like clarifying moments in either podcast for me was at the end of the episode with Brian, the VC, where I asked him, would any of this matter if like my company was growing and my revenue was growing and my users were growing? And he's like, no, not really. Like we could justify anything at that point. And so I just realized for myself, like I would rather do whatever I need to do and scrap and get by and build and build and build until I have their language, like the metrics that they're looking for, so that it doesn't feel like I'm like trying to get someone to take a chance on my vision, and instead just be like, oh no, like I've got this, this, and this. And so that's the switch that really flipped for me is like, okay, people in your life, friends and family, people that know you, people that love you, people that want to see you succeed, they're buying in on trusting you and just trusting that, hey, I'm going to give him X amount of money. I might lose it, probably going to lose it in the odds of things, but I want to see him, pursue this and go for it. That's not VCs or angel investors. Like they are seeing this as a financial transaction, and that just changes the dynamic. It changes the reality of it.
Yeah. I'm so glad you brought that up, because I think I've heard a lot of people say that before too. It's just they hate the act of asking for money. And I think the conclusion that you got to, which is because sometimes we forget, and it's like these really simple things that seem obvious in hindsight. So I think that discomfort comes for a lot of people when they are just asking, quote unquote, asking for money, right? And this is something I try to get across in posts. Instead of asking for money, it's you're asking for someone to help you hit the next milestone. And how much money does it take to hit that next milestone? Because then it's a different approach and a different conversation, right? And also, I think to your point, it's just presenting an opportunity, and the opportunity at the stage you're at now might just be, here's the next milestone I need to hit. It's not, you're not presenting, do you want to sell this for a 10x return in 15 years? It's the opportunity is, do you want to be a part of helping me hit this next milestone? You know what I mean? Because
Exactly.
yeah,
Yeah.
and that can be such a helpful mindset shift for people who do feel uncomfortable. Now, some people will go like ask for money all day long, but even then, at a certain point, it wears on you, because it's
Exactly. And
exhausting.
yeah, and some people they like it, like you said. Some people like that. That's their skill set. Like they just love it, and it's an interesting skill to have. And I think that it's valuable when people have it in certain contexts. But for me, I think this was like a forcing function that really made me realize like I don't need $500,000 yet. Like I don't need a couple $1,000,000 yet. Like but I'm starting to understand what it will look like when I'm ready for that. I'm
Mhm.
already building out the spreadsheet of like, okay, when I want to go raise $2 million from a VC, here is exactly what I'm going to use that money for. And here's exactly what I'm going to do to get to the point that I'm ready for that. But what I've felt in multiple conversations on these podcasts and actual live VC conversations is they ask me what I'm going to use the money for, and a lot of it is like, oh well, in a while I'll need, and it's like as soon as people hear that, they're like, well then you don't need that, like, and that's if I could just drill one thing into early founders' heads, it's just this idea of what do you actually need to get to the next thing, and that might be 2 months, 3 months, 4 months from now. But if it's not like, oh my God, I cannot keep going without X amount of money, it's not that's when you're kind of just like asking for money, like maybe. But
Yeah.
if you can go in and be like, no, I need this, this, and this because of this, this, and this, that's just a fundamentally different conversation. And then it doesn't feel like asking for money. It's like, no, I need capital to pour onto this fire that I've.
Yep, totally. I just heard a VC the other day, and they're like, we like to follow an entrepreneur for like a year, 2 years before, blah, blah, blah. So I think a way to approach a VC when you're super early can be, hey, I'm raising, 250,000 right now from angels to hit this milestone, to be able to prove these points. And then I anticipate, raising $1 million or $2 million VC round. So then they know you're thinking big enough, right? But they also know you're realistic with where you're at and that you are going after angels. So that shows like so much logic. And, who knows, maybe they know an angel who invests at your stage, or, who likes to be involved. Like VCs are also pitching for investors, right? But similar to Jason, who you met with, he wants to get involved. So he might not just invest in a fund, because part of the fun for him is actually being hands-on and involved in the company. So it's a really great way to kind of frame that. So I love that you brought that up. Let's talk about each one real quick individually. So you met with, we paired you up with Brian Bell from Ignite Ventures. He's the founder, managing partner of that VC firm, host of the podcast, in the AI space, done some mental wellness stuff. And then Jason Butcher, angel investor, very hands-on, has done a lot in this space in particular. And so tell us a little bit about, like, any differences between the conversation with the two, and just any follow-up conversations you've had with them.
Yeah, I think Brian and like the VC world, just it feels more math. Like it's more, they're pattern matching. They're trying to fit you into their kind of equation. He even said like he has a spreadsheet. He's analyzing it from a numerical standpoint. It feels very, if there's a art and science spectrum, if there's a math and, paint, like it's more math, it's more science. And Jason and the angel world is a little more art. It's a little more feelings. It's a little more vibes and fit. But where they both feel similar is they both want a level of like traction and consistency and literacy in the world, in the language, knowing very clearly the value that you would want them to provide, that you are confident they could provide. And so I've followed up with both of them. Brian, and this is kind of the VC world, is like, just send me updates, like keep me updated. And when you're actually ready and like, like you're bursting at the seams because you're ready, and you'll know when keep me in the loop. And so I've got that kind of relationship with him, which is awesome. And then Jason, we met, had a great conversation, made some introductions. And he even said on the podcast, he's like, he wants to go when it's almost never are you going to get a significant financial investment after meeting someone for 30 minutes, an hour. Like they need to get to know you and trust you. And that's why your friends and family, it's a very different conversation because they've known you maybe your whole life or for 10, 15 years, and you've built that trust, you've built that credibility. Getting money from people is hard. Like getting someone to write a check to you or your company, it's a really big hurdle to climb. And we are trust-based creatures. We need that confidence. And so while the vibe of the conversations were very different, focused on different things, different questions, the root is still like, I need to see what I've seen before that I can trust that this person is going to be a good steward of my money.
But here's the crazy thing, right? So totally agree. I think those are all great points. So imagine if you have like 20 more of those conversations now, right? And then a year from now, you are, or 6 months, whatever it is, 2 years, whatever, you're at that point. You've got traction, you've got some momentum. Guess what? You've got these warm introductions of people who've been following you and are like rooting for you and excited. So then that conversation, it will be so much less hard, right? When you're actually ready for the money and need the money, you'll have these relationships that you've been building over time. Because yes, nobody writes you a check, very, very, very rarely, unless you are just like on fire and you've got some other,
or a warm intro and like their friend has already invested and they've like, there's a lot of that can go on, but like, no. And what you're saying, it's relationships, it's planting seeds, it's nurturing them. It's human to human dynamics. Like you take the time, you don't, and that's where I think a lot of your posts speak to this. And I think it's so spot on, which is like, you're kind of always fundraising. Like you're kind of always take meetings if people want to take meetings, always ask for introductions. Even when you're not raising, you should be warming your, like it's kind of this never ending thing, because if you just wait until, oh, I'm ready, well, then you're starting from square one. You want to be like, oh no, I've got these X number of people who are following my traction, and I'm updating them every quarter, every couple months with what the developments that are happening. And then when the switch becomes, okay, I've done all this and now I need this because of this, like, it's a very different standpoint. And I think what skews a lot of people is just the stories you hear about, like, X person raised $20 million seed round but it's like their buddy is the principal at the VC, their family member. Like, there's always something. I don't know if I've ever heard of like a first time founder cold raising VC money. Like, it takes so much more time, and it takes relationships, and you have to really build that pipeline, build that, and you do it organically. It takes a lot of meeting people and a lot of conversations.
Yeah. I think too, if you can also look at it like 6 months from now, like let's say you're keeping them updated, whatever your cadence is, every other month, quarterly, and you need a strategic hire or somebody who can, play a role in your company or a connection or something like that. You can then put that in your update. I'm looking for this. And you've got like a really solid network to draw on of people who are well versed, in that space. So there's so many things that can come from nurturing those relationships, and you just don't know. And some will be absolutely nothing, but that's just part of the deal, right? It's like, you just never know. So, okay. So with that, tell us where you're at now. And because we filmed these a few months ago, I know
Yeah.
you got some feedback that like, I think the things that stuck out to me, again, I'm not in the tech space, so I'm on the periphery with this stuff, but in the last 5 years, there are people who have raised money off with no sales, like pre-revenue. I mean, I raised money pre-revenue, but I got absolutely as far as possible traction wise, and I had licensing and regulation issues, and that's why I needed the money to get to the next step. But in AI, there have been a lot of people who've raised off just an idea, but these guys are looking for paying customers, right? Which I think is, obvious and valid. But where are you at now? What's changed? What's your focus? Like, give us some insight there.
Yeah. So yeah, fundamentally, just like, in this world, months feel like years. Like, you change so much, you learn so much. And I've just been so focused on trust and credibility. And in this space that I'm in, like, building something that is sustainable and building something like that model of, we're going to burn X amount of money and we're going to be pre-revenue because we want to, I fundamentally think that is going to phase out. I think there's going to be some high profile results of that not working out. And I think that people are going to get really skeptical of that model. And so I've been really structuring my strategy around, how do I get to actual sustainable unit economics as quickly as I can. And so I'm building out the premium version. I'm building out the data infrastructure to support actually monetizing this. Like Brian said, he's like, start charging for this as soon as you can. Find out who's willing to pay for it, because a company that has $0 in revenue and a company that has a couple $1,000s a month in revenue, different stratosphere of company. I don't want to be raising pre-revenue just on an idea. Like, I can do so much more work over these coming months to get to a point where I have paying customers, I have the data infrastructure, I have everything in place. And then it's time to scale it, which is what I'm envisioning, is raising in 2026, ideally, but later in the year, but really taking it and just keep going. Like, doors are opening that I didn't even know, ways of getting funding and ways of getting development resources. Like, by staying scrappy, you're forced to really find out what you're made of. And I think that sometimes, like, it sounds counterintuitive. Like, I think raising a lot of money or having a lot of money available can lead to bad decisions. Like, it can lead to less than optimal decisions. And when you are thinking about each dollar and knowing that you need to take it, like, it really just teaches you a lot. And so I'm just embracing the discomfort of staying in this phase longer, because I would rather raise on my terms down the line, as opposed to, like, let's say hypothetically, I could send my deck out to 50 VCs, spend months taking meetings, maybe get one to like, that would just take so much time and it would distract from what I know I can be doing on my own, not on my own, but on like
Yeah.
without that fundraising.
Yeah. And so you do, because before you weren't sure, like, should I bootstrap? Should I, raise? So at this point, are you like, yes, I do want to raise money? And if so, why?
Yeah, I do. Like, I just, for whatever reason, I do. Like, I like Silicon Valley. I like the VC world. And this might just be like the stubbornness in me, but like people do keep kind of saying, like, VC might be not the track for you. And I'm just like, I don't know. We'll see. Like, I do want to do it. Like, I think that there's things that I want to do that large infusions of capital will make possible. I think there's credibility and validity that come from that path. There's networking opportunities. There's resources that the venture capital firms provide you. There's just a lot there that I think is exciting. And I'm excited about the potential. But I also, every single time I feel like I'm like, oh, maybe I will at this point. Well, then as I get closer, I'm like, well, what if I just bootstrap a little more? What if I bootstrap? So it's like there could be a world where I bootstrap to revenue and then the revenue is working and then I don't need it. And then I'm like, hey, I'm going to go a little longer. Like I'm very open to not knowing what it looks like, but there is just something in me that like, I like it. It's a cool world. I like talking to VCs. I like their questions. I like the pressure. I like the speed that they want to move at. Like, I don't think I'm ready for it yet, but it is. It seems exciting.
Yeah, I mean, I don't think we're entrepreneurs and do what we do because we like just sitting and, repetitive tasks and boring stuff, right?
Absolutely.
So I think there is an element, I totally agree with you. It's why I do this podcast. I love talking about this stuff, right? It's so fun. And I think that's a valid reason. Like, that's honestly, if you're just like, I just love the idea of like growing something big, and it's again, it's not just the money, the strategic introductions that you could get from raising VC money with the right VC, that can be a game changer. There's a reason why they are able to take companies and, you know what I mean, get the hockey stick growth. So it is an exciting path. I think, and that's why I always say, like, there's nothing wrong. There's no right or wrong path. It's like whatever's right for you. The only caveat I would put in there is that, it's fun, it's exciting, but if it doesn't like, you just don't want to attach your personal success to any one path, right? That's where entrepreneurship can be extremely, difficult. So I love that you are going into it with a just like, I'm okay with the unknown and it's exciting, it's a path. When it makes sense, I'll pursue it. I think that's like the best perspective you could have, because there's no way to know exactly what the outcome is. I think you want to have the vision, you want to hold the vision, but you also have to like let go and see how it all plays out to some degree, right?
For sure. And I think for me, it's like, okay, what's your North Star? Like, what is the one thing that you're not like that if you're going to focus on one thing, what is it? And for me, it's just being able to do this, being able to keep building this. Like, I am so excited about Remy and the feedback that I'm getting, the opportunities to expand into other apps and become more of like kind of a studio portfolio company. Like, there's just so many ideas and so many things that I want to do. And I've never been more confident in the long-term path, the long-term trajectory, and just accepting and understanding that like how you finance it is just like one piece of this puzzle. Like, that is one variable that often will figure itself out as you focus on the other ones. And so anyone listening, it's like my thoughts would just be see VC, see all that. Like, that is not the goal. That is not what you're working towards. I've talked to some VCs or people who raise VC money and said, like, if you get caught up in the idea that the goal is to raise money, it just distorts everything. And so really just putting it in its place as like it is, how financing your business is one role that you have. It's one equation. It's not the measurement stick. It's not the success metric. Like, my success metric is the user testimonials that I'm getting. It's building something that's actually helping people. And I also think like when you're building something like I'm building that's helping people and is designed to be something that people rely on and enjoy as a tool to help them, if you are building in a way that's unsustainable financially, you're putting a lot of risk on if you run out of money and that spigot turns off and then all your users have to like, that's not fair to them. And so that's why I am so focused on building a business that makes sense on the unit economics so that I know that it will be sustainable long term also.
Yeah, no, it totally makes sense. So what would you say, because I think these were like your first official meetings with investors, right? So if there's someone out there right now who's kind of at the same stage that you're at, and they haven't actually taken a meeting with an investor, what would be your advice for on how to prepare, maybe how to get their first meeting and how to prepare for it in a way where they can like maximize the feedback and because you get a lot of good insight, right? That if you didn't have those meetings, you might be just kind of less clear on what they're looking for, right? So any advice to anybody who hasn't had those first meetings, how to prepare for them or how to kind of get those, who to try to get those meetings with?
Yeah, I think first is know your numbers. Like know exactly the state of where your company is and also know how much money you need and why you need it right now. And if you can't, like you did a post, like if someone gave you X amount of money, what would you do with it? Like if you don't have an answer to like why you need a lot of money, down to like the line item, like I would do this and I would pay this person this much for this long. And they would like, if you don't have that, you're not ready to talk to investors unless it's like an informal information gathering. And that I think is a way, but those are hard to get. Like it's hard to get an investor's time. And that's where this opportunity was so cool. And I think people that listen to this will get so much value from it because even like a traditional VC pitch conversation, you're not getting this level of feedback. They're just finding out if you're ready for them. And if they're not, like Brian was like, as soon as I find out that someone's not ready, I'm trying to end the call as quickly as possible.
Yeah.
And so I think going to networking events in person and going with a curiosity, like I want to learn, I want to share a bit about what I'm doing. But know what you want to learn. Do you want to learn if there are competitors? Do you want to learn, like find out whatever it is for your company that you want to learn, but don't rush it. Don't feel like I've had conversations with founders where they're like, oh, I'm stuck. I need to raise money. Well, I'm like, what do you need the money for? It's like, well, I need it for this. It's like, well, have you done all of this yet? And they're like, well, no, like you can't wait for money. You have to be building and building and building. And then they're going to see, oh, this guy has done all this and now he needs money to keep it going. It can't be a like, oh, I'm stuck. I need money to keep going. That's not an attractive investment.
Yeah, it's crazy. I had a interview yesterday. It'll be out in a few weeks with a woman who, with a $2,000 investment, has grown her company to over $4 million. A physical product, zero outside investors, and
That's
it's like
crazy.
that is a product that has demand, is priced correctly, and then it works. You know what I mean? It's like it's interesting how business can work, and there can be a lot of, sometimes you get to that point really quickly, and sometimes it can take a lot of pivots to get there, but that's what you're looking for, and once you find that, then you're in a much different position. But
Yeah, because at the end of the day, like the fundamental equation for a business should be, can you charge more than what it costs you to create or provide the service? And then you become a business that there's a profit margin. Then you pay your people, you make a cut of the profit, and everybody wins. I think Uber and Amazon Web Services and like these couple outliers who lost a lot of money for a while and then flipped the switch and made a ton of money have created this mindset that it's okay to just like lose a ton of money and just rely on investors to grow and grow and grow. And I just think that like that is a chapter that we're in right now that I think is going to close. I think it's going to be messy. I think there's going to be a lot of people that lose a lot of money. And I think what's going to come from it is a refocusing on businesses that actually make sense economically early and show that they're growing and they're sustainable and that money is fuel to the fire. I think that this relatively newer mindset of like, we're just going to burn billions of dollars and then maybe someday figure out how to be profitable, I think that's going to be short lived.
Yeah, I agree. I think there's some certain, again, if the founder has a crazy background or has a whoever, inside, whoever, whatever connection. But for your more typical founder scenario, I agree. Like figuring out a profitable path early of what you can sell, to your point, that will make money, that will be able to pay for everything and have some left over, um, is going to be a much more attractive investment. And honestly, having done it both ways, it's so much more fun to be profitable. It is super stressful and
Can't
exhausting.
imagine running a company that is reliant on raising billions of dollars every year to just keep going. Like you are just
Yeah.
constantly have to be in this hyper vigilant state because if your business, it's like, if it's self sustaining, you are able to focus on more like all kinds of different things. And so, yeah, I think like, I don't like we work like, and just because someone's able to raise money, that also doesn't mean that it's going to work. Like there are a lot of stories of people who are able to raise the money because they have the skill set or they know the people, and those people lose a lot of money. Like there's a lot of times where it doesn't even work out, even for the people that can raise the money.
Yeah.
So
Oh
it's
God,
just,
yeah,
it's
totally.
a tricky world. It is a very tricky world.
Yeah. And I think there are still, the crazy thing is, as much as we think the world is saturated and there's so much stuff and services and everything, there are still opportunities that people would just like. I can't remember if it was in your interview. Oh no, I think it was another guy that interviewed. But I love the way he said it when somebody is like ripping that product out of your hands. You know what I mean? Like when they are just dying to get their hands on it. Those are the like solutions as an entrepreneur that you want to try to find. And I think sometimes we have this idea, we have this need, guilty, I've done this, where we want it so badly for ourselves that we're more focused on it for ourselves versus what someone else, not just one other person, but like a bigger market will actually like tear out of your hands to get a hold of. And if you can kind of approach it with that, that's something I certainly didn't get in the beginning, was like that's what I'm ultimately looking for. But again, it was different then. It was okay to just like keep raising. You didn't have to be profitable. That wasn't the expectation, which is kind of crazy if you think about it. But I agree with you. I think we're in a new phase now where sustainable, profitable, at least break even, at least close to it, is going to make for a much more attractive investment.
And like, don't get me wrong, if you're making profits and you're reinvesting them into the company, or if you're raising money and you're over investing, like you don't need to be net gaining money if you're
Yeah,
investing into
no,
growth, but just like unit economics
yeah,
standpoint, I think is where things are really, really going to
yeah.
shift.
Yeah, not just losing. And I think a part of that too is being lean. Even when you do get money, staying lean. It is so easy. It's like lifestyle creep, right? It's so easy to just start spending more money when you have more money that you don't really need to be spending. And I think that's probably something also, another reason to approach investors with, here's what I need for this next milestone, because they know once you get a bunch of money, it's a lot easier to spend that money.
And like Jason made a great call out, was like, show how much you've raised and what you've accomplished with it. Because if you can prove how good you are at making money stretch, like that's a great sign. Like that is something that investors are absolutely looking for. And I think by bootstrapping, it's really honing those muscles that even if I did raise a lot of money, I'm going to have this same approach with that money. It's still going to be, how do I get this money to go as far as possible? How do I use this money to get me where I want to go? But yeah, if you get all the money in the world too early, you don't have to ever really get that. And I think that in the long term, if your goal is to build a long term business, is going to, I think these lessons and what I'm learning by going this route are going to serve my company very, very well.
Yeah, definitely. Well, I am so stoked for you. For anybody listening, sounds like Shane is going to have some really good investor updates to share. So I'd imagine if you want to get on that list and reach out to him and follow his traction. He'd be happy to do that. Anything else, Shane? So what's your next step? So monetizing the app? What is that your next big milestone? And I know you have a lot of
Yeah,
other
I think
kind of stuff too you're working on, you said.
Yeah, I think for me, like the North Star of everything is just like build a great product. Like just keep making the product better, keep getting feedback, keep adding features that people are asking for. Like fall in love with your product, like love it and make it the absolute best thing it can possibly be. And so that is always the number one focus is just making the product better and just keeping that because I love that. I love the tech conversations and the features and the roadmap and prioritizing. Yeah, it's making the product better, figuring out how to monetize it. I have a clinical advisory council where we've been locking down the medicals, like staying in our lane and figuring out what we want to be and what we don't want to be. Uh, so yeah, it's just there's a lot of moving parts, and it's just keeping the train rolling and just taking it one step at a time.
Yay, congrats. Well, let's have you back on in a year and see where you're
Yeah,
at.
that'd be
I think
great.
it'll be super fun. And again, if you're listening and you didn't hear the first three, we had Shane and I going through his pitch deck. He had a great pitch deck, compared to so many that we see. He actually really had a nice, obviously, you got some feedback from Jason and Brian. But I think one more quick note there, too, everybody you meet with is going to have a different idea of what you should do on each slide and all that. And I think Jason mentioned that, like you want to sift through the feedback that you get. But you need to get feedback, right? But you don't have to take it all, and everyone's going to have a little bit of a different opinion. But yeah, episode 1, we went through his pitch deck. Then he pitched to Brian Bell and then Jason Butcher. So go catch those 3 episodes. Really great conversations. Those guys had a lot of great feedback. I think you just have a great way of conversationally talking about your company, keeping it upbeat. So props to you for that. I think for anyone listening, that goes a long way. You know what I mean? Just somebody who's able, just kind of keep the conversation upbeat and going back and forth is super important. So amazing. Stoked for you. Have
Thank
a
you.
great TEDx talk. I think you'll crush
Thank you.
that.
Yeah, I'm excited.
And send it over once you're done. And yeah, anything else you want to share?
No, I was gonna say thank you for this opportunity. Like I now like my deck for when it's time to raise like is going to be just so much better. Like the little stuff, the little changes, the add this slide, like phenomenal. Like genuinely, if you haven't listened to them and you're in this process, like I think there's a lot to learn from those conversations. And I was in them and learned so much. So yeah, I think I just can't recommend it enough because I got like real tactical, like do this, and it's going to make my deck a lot better when the time is right.
Yeah, they had some great feedback. Wonderful. Okay, we'll look forward to staying in touch and we'll see you soon.
Sounds good. Thank you.